Hello, my name is Maurice Washington. I want to welcome everybody to another episode of Executive Talk. Those who are watching live, those that are listening later on our podcast, thank you so much for joining us. In today's segment, we're going to talk about what entity type should I choose. We need to figure out why that's important for us as business owners to choose the right entity type to move forward with our business. I know it's easy to get into business, but what we're going to learn today is your entity type has a lot to do with financing and everything that you have going on. So without further ado, I'm going to bring Victoria Smith, owner and operator of Victory Accounting, to talk to us about this and talk to us about how to be really positioned within our business. So without further ado, let's go ahead and bring Victoria to the stage. How you doing, Victoria?
I'm good. How are you doing, Maurice?
I'm doing well. Nice to see you. This topic is so prevalent, so important, especially at this time of the year. I think this is an all year thing, but this is kind of that time of the year when you have some choices to make and kind of look over everything within your business, right?
Right. So we're getting close to the beginning of the year. It's a good time to, if you're going to change entity types for next year, this is a good time to look at all of that and make sure that you're in the right entity. Or if you need to make that change, then you can do so at the beginning of 2024.
Okay. And just to create a framework around this, when you think about entity type, one thing that we can really truly address is that it's very easy just to jump into business and pick an entity type, right?
Right. So if you just start doing business and you don't choose anything, then you're automatically a sole proprietor. If you end up going into business with a partner, then you're automatically a partnership. So if you don't make a choice, then the choice will be made for you by the government.
Gotcha.
So,
All right. Well, since you're talking about sole proprietorship, let's talk about that real quick, and let's talk about some of the advantages that you have. So we have distributions or cash can be taken out as needed. You don't have to file additional tax return at the end of the year, no payroll or payroll taxes payments to worry about. So in hindsight, that sounds like actually a pretty easy thing, right?
right. So sole proprietorship is the easiest one to get into. Even if you don't register with the Secretary of State or anything like that, the IRS is still going to consider you a sole proprietor. So this is one of the most easy and common ones to do. You don't have to file an additional tax return, but you do have to file a Schedule C to claim the income and your expenses that you have with the business.
Okay.
So,
all right. And conversely, let's talk about the disadvantages. Go ahead and break this down for us.
right. So one of the disadvantages is that because you're not running payroll and you can just take money out as needed, whatever your net profit is, you're going to pay self-employment tax on that income. So this does help you pay into Social Security, Medicare, and all of that. As if you were having a W-2 job, you're still paying into those entities. But it does make it so that it's harder for the company to take that tax out and claim that expense. So that's one of the disadvantages. The other thing is that it's harder to prove your income, especially like if you're trying to go to a bank and get a loan or anything like that. Like we did talk about on our trying to get loans through banks show. So that can be one of the other things that is difficult. You kind of have no legal protection because you might not be separating everything like you're supposed to. Even if you're running a sole proprietor, I always recommend opening a bank account separate from everything else that you have going on to try and keep everything separate.
Okay.
And then that last one is you have to make quarterly estimated tax payments. So if you're making income, I always recommend that you hold about 30% of what you're making back to pay the taxes.
Gotcha. Okay. So let's talk about a couple of points here. So when we talk about the 15.3%, because of this entity type, is that more on the higher end or is that pretty neutral across the board?
So when you're like a W-2 employee, your employer pays half of that and then you pay the other half. So if you're running your own business, you're still paying that full amount, but your business gets to take the expense of the other half. You still do get to take the half of the expense as a sole proprietor, but it just feels like you're paying more taxes on the overall income that you have in the company.
Gotcha. Okay. I want everybody to really pay attention to something else that Victoria has said. you can have a fantastic sole proprietorship business going right along, and you think you might be ready to go ahead and get a loan and go ahead and hire some employees. But this particular entity type may trap you in that conversation with the bank, right?
Right.
You have nothing to prove.
Yeah, it's just hard to prove what you have coming in, going out, unless you have an accountant who's sitting down and actually creating a profit and loss and stuff. It can be really hard for the bank to see or be able to tell what you have actually coming in and going out.
Gotcha. All right. Well, let's talk about this one is very common, which is having a LLC.
Right.
And, I think a lot of business owners are moving towards this. I think more in it seems maybe the last maybe 5-10 years, maybe, or is that around timetable?
Right. So an LLC is more on the state side.
Okay.
The IRS still sees you as a sole proprietor if you're the only one in business.
Okay.
So what the LLC though does is that when you open an LLC, if later on you decide you want to become an S corp, then it's easier to backdate it. So let's say that you started out, you open an LLC, and then you get to the end of the year and you made all this money and we really should S corp you to help you save on taxes. We can actually backdate your S corp to the beginning of the year if you're an LLC.
Got it. So talk to us a little bit further because you have some more key points here.
Right. So you can still take distributions just like you can with a sole proprietorship.
Right.
You won't have to file an additional tax return. You have to file a Schedule C with your individual return.
Okay.
You don't have to worry about the payroll and all of that throughout the year.
Gotcha.
The LLC gives you a little bit of protection just because you can kind of like separate everything. Again, you always want to keep everything separate. It helps you just legally separate your individual assets from your business assets.
Gotcha. So from a bankable situation, does this still give you leverage to talk to the banks and potentially get a loan or move forward in that fashion?
It gives you a little bit more leverage just because the bank will recognize that you're putting a little bit more effort into your business as far as creating a business. But it can still be tricky because they're gonna want to see profit and losses. They're gonna want to see tax returns. So it can be still tricky to get that loan.
Okay, that's fair. Let's talk about some of the disadvantages because again, with every advantage, there's always some disadvantages that come with it. So talk to us about this first one because this must pay the self-employment tax at 15.3% still.
Right. Yes. Because you're filing on a Schedule C.
Okay. And just like you said earlier, it's really no different. It's not much different than an S corp, or I'm sorry, no, it's sole proprietorship, right?
Yeah.
Okay.
It's not much different than a sole proprietorship. You just have LLC added to it.
Okay. All right. So talk to us about the next one.
So then again, you're not doing payroll, which can make it hard to prove to the bank how much income you actually have coming in. And then again, you do have to make your quarterly estimated tax payments.
Okay. So then that brings up another question here with that W-2. One of our other shows you were talking about is putting together your Social Security and retirement and so on and so forth. If you can't put together that payroll, is there some cause and effect in that fashion?
So that's where the 15.3% comes in, is that 15.3% is your Social Security and your Medicare. So the one thing that you really want to make sure is that Social Security is taking your tax return and putting the correct numbers into your Social Security. Because when they're dealing with LLCs or sole proprietorships, they've been known to not put in the right numbers, and then you don't get the correct Social Security. So that's one thing you're going to want to keep an eye on if you are doing a sole proprietor and LLC, and really technically anybody. You should just be checking to make sure they're putting the right income.
Okay. All right. This is another one that I want to go ahead and take people to this one because I don't know if there's a lot of this going on, but I know there's some situations in which people are working with somebody else. They say, hey, we have a great business idea. We can put this together. We can go 50-50 on this. And then next thing you know, you're into a partnership. So talk to us about the dynamics within the partnership.
Right. So a partnership can be great as far as like you have two people to invest, you have two people to work the daily grind of the business. You know, if somebody's busy, somebody else can kind of take care of things while the other person is gone. So, you know, a partnership can be great in many ways, but I always recommend that when you have a partnership that you do work out a contract with a lawyer of how that business is going to be run and who's going to be doing what. So that way you have very clear defined roles within the business.
That's fair. Let's talk about some of the advantages because again, let's put a positive spin on it because like you said,
Yeah.
we have two people coming together and maybe this could be amazing, but the key component is there's finances that actually start to collide within this partnership. So talk to us about how that shows up.
Yeah. So, I mean, you have two people to invest, you have combined ideas. In a partnership, you're not allowed to do payroll for the partners. So, that's one aspect that you don't have to worry about unless you have employees. So,
Okay.
I mean, it can be great to have a partner to help work the business with. You just want to make sure that you get everything in writing.
Okay. Let's talk about some of the disadvantages, and I have a few questions in regards to this because the disadvantages seem to literally outweigh the advantages here. So, talk to us about this. Let's go ahead and spend a little bit of time here.
Okay. Yeah. So, one of the negatives, you know, it can be a positive not having to run payroll, but it can also be a negative not being able to run payroll for the partnerships. Because if somebody is doing a little bit more work than somebody else, then they might want to get paid extra, and you're only allowed to take distributions based on your percentage. So, if your percentage of owning the business is 50-50, then whatever one partner takes out, the same amount has to be taken out for the other partner.
Okay. Oh man. All right. So then you must keep all the distributions based on partner share. So this is where you're talking about the lawyer being involved in drawing up paperwork.
Right. Yeah, because you want to have clear defined roles of how everybody's going to get paid because obviously we're in business to make money and to get paid from that business. So you want to make sure that that is very well defined and that you make sure that your percentages are based on who's doing what and how much each person is putting into the company because that's how much they're going to be getting back out.
All right. This one's a doozy right here. It doesn't sound awesome at all, but if a partnership splits, you must start the company all over again. That's so you can't just take the business and say, "Hey, look, I'm going to finish running it." You got to really start everything that you created over, huh?
Yeah, you have to really
Wow.
like take everything and start it over when you end a partnership. Or let's say that you're in a partnership for a long time, it's going really well, and one of the partners passes away. At that
Right.
time, your partnership is over as well, and you have to start kind of all the paperwork over again. So
Okay.
that's the hard thing about partnerships is that like if one person leaves or one person wants to go, it's hard to continue that partnership. You have
Gotcha.
to start over.
So am I getting this last one right, which is excuse me, an additional tax return, taxes flow over to your personal tax return. How is that? What does that mean?
Correct. So when you have a partnership, you have to file
Okay.
an additional tax return, which is a partnership return.
Okay.
And when that has all been filed and all the information has been entered into that, you then get a K-1, which flows onto your personal taxes. And that's where you would pay the taxes. Usually partnerships end up having a higher tax rate just because you're not able to take payroll, you're not able to do some of these other things.
Right.
So that can make it have a higher tax rate than all the others.
So let me go ahead and throw this out because it has a lot to do with the topic that we're talking on. But if you're a partnership, how much do you see communication has to be? How well does communication have to be in this partnership in order for it to really function with all this stuff in the background that they have to commit to?
Right. You have to be um, willing to work with somebody else. And, you know, it may work great for many years. And then at some point, something may happen with the relationship and then it's no longer working. Or one person has to go one way, wants to go one way, and the other person wants to go another way. So, I mean, it can be difficult to keep a partnership going long term, especially if, two people have two different ideas or they're both headed in a different direction. It's really important to make sure that you keep checking in with each other and make sure that you guys are keeping on track with your goals and setting goals, future goals of where we're planning on taking this so that way you don't get off track.
That's exactly right. So there's a level, and it's almost like in a partnership, unless you're really long-term driven, this should almost be a short-term business decision. Meaning we're only doing this for the next 5 years, and then we're going to both exit out of it and do our own thing. Because, like you said, one thing that is true about people is that tomorrow's change is completely different than today, right? So I may be thinking, I'm ready to try something else, and the business is already blown up just based off of that moment.
Right. Well, and COVID changed a lot of things. A lot of us had to pivot during COVID. So, if somebody wanted to pivot one way and somebody wanted to pivot another, especially, during such a crazy time in our world and so many businesses doing so many different things, that right there could have caused conflict between partners trying to get everything done.
Yeah. So then if you have a couple of people, since we talked about sole proprietorship and we talked about LLC, if you have a couple of people working in the same business, is it possible for them to be in an LLC in a partnership as well?
Yes. Yep.
Okay.
You can have an LLC that's a partnership. My recommendation, which will take us to the next entity, is that if you want to go into business with somebody else, to do it as a S corp.
Okay.
Because that gives you some more leeway when it comes to having partners. If you do it as an S corp, you're buying into a share. You'll still have a percentage, just like you would with a partnership. But with an S corp, you have payroll. So if somebody's doing more than another, then you can adjust for that in payroll instead of having to just take the distributions. The other great thing about an S corp is, let's say somebody wants to leave or somebody else wants to buy in, then you can, you do have stock when you have an S corp. It's usually closely held private stock, but then you can let somebody buy their way in or even buy somebody out. So with the S corp, you have a little bit more flexibility when it comes to working with somebody else. And if you do buy somebody else out or somebody wants to leave or join, then your company isn't over.
Got it. No, that's actually good. So it seems like in a partnership, especially nowadays, especially how many changes people go through, you need a fluid entity. And it seems like the S corp is the way to go, right?
Yeah. If you're going to have multiple people, I would highly recommend the S corp instead, just because it gives you a lot more flexibility. And again, you get to be able to do the payroll, so you can kind of match everybody's payroll to what they're actually doing in the company.
Got it. Okay. So you don't have to pay yourself employment tax. This is a business deduction.
Yeah. So instead of paying self-employment tax, you would pay your tax through the payroll. Your taxes are still going to flow through onto the K-1, but you won't have that self-employment tax on all of your income, only on the payroll part.
Oh, okay. All right. So then you can use a combination of estimated payments and payroll to paying less taxes. So yeah, how does that work?
Yeah, so you can pay taxes through payroll, but you can also make estimated tax payments if your payroll taxes aren't going to quite cover all of your taxes. So that way you're making sure you're still paying in without having to pay everything through payroll.
Got it. All right. So this is where, and this is something that this entity type comes with, because I remember in one of our shows we were talking about reasonable salary. Is this where this is applicable?
Yes. So one of the things that you do have to be careful of when you're doing an S corp is making sure that you're paying yourself a reasonable salary. So I do have the example from our reasonable salary show. And this one was of a dentist who had a physical location. The reasonable salary for the dentist should have been $100,000 $172,622. And this was based out of Denver, working 40 hours a week, even though we all know that everybody works more than 40 hours. So this was just an example of what the dentist's reasonable salary was. We broke down where they're spending their time in managing the company. And then this report also breaks down all the different things that the officer was doing in the company to make sure that it keeps running. So, there's always some sort of cleaning and janitorial work. You're going to be doing repairs, especially if you have a physical location. You might have a lawn or some sort of garden beds that you might have to take care of. You're most likely working through some payroll numbers, in inserting payroll to make sure all your employees get paid. You're usually going to be doing some sort of bookkeeping, even if you have a bookkeeper, because you're still going to be taking care of paying bills and different things like that.
Right.
You're your resource clerk, human resources. So if an employee has a problem or anything is going on, you're usually taking care of that. Making sure that your employees are getting training and development. You might be having to do some computer support, because computers don't always work, even though we would love them to work all the time. You've got some general operations manager duties, which, are just your general everyday taking care of running the business in essence. And then 50% of the time was spent actually doing dental work on patients. So this is a good way to see where your salary should be at if you're in an S Corp. And we can always run the numbers and then adjust if need be. If we find that, this doesn't seem to be reasonable for your business. One of the things that we definitely want to look at is that if we're not able to hit this reasonable salary, then you're not taking any distributions out of the company.
Okay. Yeah, this is out of all the entity types that we discussed so far, which one is the heaviest or the heaviest scrutinized from the IRS?
Probably the S Corp is probably the heaviest scrutinized, just because it is at a more professional level.
Okay.
But sole proprietors can be scrutinized as well, just because they may not know all the rules or be keeping track of everything. So that would be one of the things that you just kind of want to be careful anytime you're running your own business, to be keeping receipts, be keeping records, trying to keep stuff separated. I always highly recommend that you have somebody looking over your information to help you navigate running your business.
For sure. Okay. Well, just with anything else that we talked about today, there's some disadvantages within the S Corp. How does this play a part?
Yeah. So you have to, with doing payroll, you have to keep up with all the payroll changes and all the payroll rules, and make sure that you're paying your payroll taxes. You want to make sure that you're keeping, like all of them that I discussed, you want to really make sure that you're keeping business and personal transactions separated.
Right.
There's always, going to be those few times where an accident happens or you misuse the wrong card or something happens. But you want to make sure you get that paid back into that business. You have the additional costs of having another return prepared. Just like the partnership, you get a K-1 after that tax return has been prepared, and then that flows through onto your personal return, along with the W-2 that you get from the company.
I got you. So I'm sorry, go ahead. This is good.
And then, of course, you want to make sure that you're paying yourself a reasonable salary.
That's right. Okay. And so the question I have for you, number one, this is where banks can look at you a lot differently, and because everything's separated, everything's itemized, you have a profit and loss. So this is really, if you plan to grow, seems like the entity type you want to be structured in to make those moves there in the future, right?
Right. And, if you're a sole proprietor and you're like, oh, I think I really should be an S Corp, you're still paying around the same things, but there are some differences, like the reasonable salary and keeping up with some of the other stuff that,
Right.
you may feel like this is definitely would be beneficial, and maybe it will, but the costs might not be beneficial for you at the time. So talking to your accountant and seeing if this is really a smart move for you, or if you really are technically better off being a sole proprietor or an LLC.
Gotcha. So
That
this is something. So I'm curious, at what timing do you want to catch yourself? Obviously, throughout the whole year, you have your projections, which may cue you in, or you may want to make a change to your S corp. But is there anything else towards the end of the year? What's that window of time that you get to really make this change if you feel like you made a lot of income that year?
Yeah, I would recommend doing it before the end of the year, so that way you have time in December to run a payroll for you, because
Okay,
that is part of the qualifications of being an S corp,
got it.
is having payroll. So you really want to try and do it before the year is over so that you can run that payroll. You're also going to have to give yourself time to get different licenses that go with doing payroll. You should already have an EIN number, so that shouldn't be an issue, but you're going to have possibly state withholding taxes, unemployment taxes, all of those different things you have to get a license for each one. So that would be the time to kind of give yourself a little bit of an extra window to get those things accomplished before the year ends.
Got it. All right. And the last entity type, which I think a lot of people want to get to, depending on if they want to, depending on this. Obviously, this is a very aggressive business move, which is C corp.
Right.
Talk to us about some of the advantages, because if you're in this S corp and you can move really aggressively and fluidly, why would I want to be in the C corp? What am I doing in my business at that time?
So you might want to be in a C corp if you want to sell stock. Most of the companies on the stock exchange are C corps. Some might be S corps, but you're probably more looking at a C corp situation, because that way they can sell any of their stocks and stuff. You're
Okay.
also locked in a 21% tax rate at this time. That could change in the upcoming years. Whether or not you want to be locked in at that amount, that could change at any time. We don't really know. It's probably locked in for the next couple of years, but like I said, it could definitely change. You will need to take payroll during that time too. So
Okay. Is this one, man, this one seems okay. So this 21%, why is it so much, or why was that 6% difference there? What
So
are we
the
looking at?
21% is the corporation pays its own taxes. Your
Okay.
taxes from this business don't flow over onto your personal return. The actual business itself is paying its own taxes. That's why you're locked in at that 21%.
Got it. All right. That's fair. So then now let's talk about some of the disadvantages. So if you take distributions, they're considered dividends and are taxed twice. That sounds extreme. Talk to me.
Yeah. So if, let's say that you're running a C corp and like I said, you accidentally take money out of the business for like a personal transaction or something, then that's automatically considered a dividend. And the company is going to pay taxes on that income, but then you're also going to pay taxes on that income. So you technically are getting taxed twice on the dividends.
Okay. All right. Talk to us. Keep going down the list you have for us here.
Yeah, so you have to, of course, again, keep up with all the payroll tax laws.
Sure.
We'll file a separate tax return, and the taxes will come directly out of the company's income. You cannot mix personal transactions at all with this company, and if you do, then you're going to have dividends.
Got it. Wow. All right. So then, when you look at this, are you seeing a lot of people transition to C corps nowadays? Are you seeing a lot of people wanting to participate in the stock market or have their business participate in that fashion?
Yeah, some employers who had bigger companies that were S corps did transfer into C corps. I mean, I saw some of that when this fixed tax rate did come out because it was beneficial for them. The one thing that you have to keep in mind is that if you give up at any time your S corp status, you are not allowed to get that back for 5 years. So that is a risk and a chance that you take. And we don't know how long this 21% fixed rate for taxes for C corps is going to end up. So it may be beneficial for you for a while, depending on where they decide to go with it. But definitely keep in mind that, like, if you do give up your S corp status, that you can't get it back for 5 years.
Yeah, that's right. Wow. All right, and I'm gonna leave off with this final question because I think this one is a huge one. When people don't realize, obviously, I'm not bringing up political for everybody to go down the rabbit hole of politics, but nonetheless, the point is when it comes to politics, depending on who's in office and what's going on that year, these numbers can change pretty dramatically, or and these situations can change at any given year. Is that correct?
Right. So they're still making laws for this year that are going to affect everybody's taxes. I mean, we saw a lot of changes in 2020. In 2021, halfway through the year, they decided to increase the mileage rates. So, you kind of have to stay fluid and keep in contact with your accountant to see kind of what is going on the political stage, because really they're making our tax laws.
That's true. All right. Give us some final thoughts here, Victoria. What do you want us to do with this?
Yes. So if you're thinking about going into business, I highly recommend talking to your accountant and letting them know what your goals and dreams are to kind of get you started in the right direction. If you're currently in a business and you've watched the show and maybe you think that maybe one of these sounds better for you than another, it would be a great time to sit down with an accountant and talk about where you should maybe be. If you already have an accountant, sit down, have a conversation with them, talk about your dreams and goals, because really where you're planning on going may have more to do with which entity type that you want to choose rather than what you got currently going on.
Awesome. Victoria, I want to, on behalf of Executive Talk, on behalf of all those that are watching and business owners as a whole, thank you for giving us this information. One thing that you can take for granted, especially if you're already in business, is, oh, I already know this stuff. We don't know what's going on numbers wise behind the scenes. And I think that's the most important value within the show. So if you're starting out as a business, or if you're coming into business, just the mere fact that you're willing to give this information and provide this wisdom to help people make better decisions, I completely appreciate you. And again, on behalf of everybody that's watching, so thank you so much.
Yes, always.
All right. We'll be looking for you next month with some more information, right?
Sounds great. Talk to you then.
You know it. All right. Talk to you. And for everybody else that's watching, want to, first of all, thank you for taking the time out of your schedule to listen to Victoria, listen to Executive Talk to provide this information. The one thing that I gained out of this show and realized is positioning. Positioning is so key within your business model. Just because you jumped into business, your position, that entity type has such a major implication on how you move. If you're a sole proprietor and you have a major year and you're trying to go to a bank, they may look at you a little bit differently. Make sure you talk to your accountant to ensure that your business is set up for success at all times. So this is that relationship Victoria's been speaking about, the relationship of your accountant to talk to you about your next move, to talk to you about your year, to adjust when you can, to make the right decision to ensure that your business and you are moving in the right direction at all times. So take this information as a positioning conversation to help you move forward. I want to thank everybody for joining us, but Victoria and we actually have to get back to work. So we'll see you next time. Thank you.